So the market's enjoyed a nice little run up lately. So the question is, will it continue? There's a lot of things going on right now. We've got Russian oil sanctions. We've got a zero COVID policy in China, which certainly could impact inflation. We've got the railways that are, under negotiation as far as their contracts, and if they can't come to terms, could cripple this country as far as moving product. Inflation. There's a lot of things out there. So the question is, this little run that we've experienced, is it sustainable? So are we at a make or a break? So stick with me as we get into the details. My name is Brian Cannon, and welcome to Markets in 5. All right, because the S&P 500 is at a major inflection point where it is truly make or break at this point, I wanted to spend this episode specifically talking about where we are. So this year, obviously, from literally January of this year, it's been just lower highs and lower lows. Now, in that time, we've developed this down channel trend. And anytime you have a resistance or support for that point that gets touched more than 2 or 3 times, it becomes extremely important, and traders pay attention to it, and profit takers, pay attention to it. So, right now you can kind of see the prior 2 peaks were associated with an RSI that dropped, and eventually was confirmed with a drop in the MACD. MACD is a slower moving indicator that's not something that creates a trigger immediately, but it does confirm. Does confirm a move in the RSI pretty well. So the combination of two is a pretty powerful trigger there. So and so the same thing here. RSI was actually overbought here and then just dropped, and that drop was again associated with the MACD. So here we are. The RSI is currently not overbought, but it is getting a little top heavy, I guess, relative to where it's been the last year. And same thing with the MACD. It's not near to turning over really, but at the same time, it's had a long run. So it's these two might be getting a little bit tired. So we're paying attention to that very closely. All right, so this chart is the same exact chart as the last chart. It's the S&P 500 just blown up a little bit. So again, if you have heard me in the past, I believe anything that's below its 200-day moving average is kind of a sick patient. Anything above it is generally pretty healthy. So with the announcement of the Fed yesterday that they would be slowing the pace in which they're increasing the rates, was celebrated pretty heavy by the market. So, with that, it blew through the 200-day moving average, but we are very, very close to hitting this major level of resistance. And again, I believe traders and profit takers especially pay very close attention to these levels. Now, the other thing that we're watching very closely is this rising wedge. This rising wedge, essentially, in the technical world, is associated with a reversal pattern. And so generally speaking, that consolidation in that specific format usually leads to a reversal, or if you think about it, a continuation of the larger trend. Essentially, is how it's viewed. And so when you've got a rising wedge butting up against a major level of resistance, that's very, very precarious point. So again, this is kind of make or break. If it breaks through to the upside, we would want to see a clear break of resistance. And then we wouldn't want to see that resistance being held up as support. So anything that usually breaks through a heavy level of resistance a lot of times will come down and test it. So if it can hold that level of support and continue to grow and build and have higher highs and higher lows, hey, that's fantastic news. But if it breaks through the resistance, breaks back down into the channel, that would be very bad. And in fact, that would essentially fulfill this prophecy of this rising wedge right here. And so those are very, very important clues that we're watching right now. So I know we spend a good deal of time on the S&P 500 in these video series, but to us, the S&P 500 represents some of the largest companies out there in the United States, and is probably the most monitored index out there as far as covering the full breadth of our corporate landscape. So the S&P has a really good history of dragging really bad companies up and pulling really good companies down. So we want to be very attentive to its trends, and we're certainly at a point where it is a make or break. So if it is able to break through and head up and head on onto the next leg, that would be great. However, if we can't and it breaks back down into the channel and heads downward, that would be not great. So we're watching that. But if you enjoy these videos, go ahead and hit the subscribe button, and I look forward to seeing you on the next Markets in 5.